Many have argued gold is questionable if it is still an inflation hedge asset, as it did not perform since the start of the pandemic, followed by the inflation that the whole world is experiencing right now. Now, this is because most investors are viewing it from a very short-term perspective. Now, let's do a comparison between Nasdaq and gold. That since the start of pandemic, basically all the US equity have been through a period of volatility. So is the gold as well, but we could see that generally gold has been moving up. And if we compare to its recent all-time peak between the Nasdaq and gold, Nasdaq, the US market, is still down 26% based on the current price, whereas gold is down 12%. But I want to see that the gold is testing the recent all-time high over the past few years at 2000, and I suspect that as inflation continue to pick up, it may ultimately test the 2000 a few times, one, two, and maybe third time, and maybe as the inflation continue to pump up, it may break and continue to move up. And in our last video, we did a comparison between the Dow Jones and the gold. We did a time frame of 50 years, 20 years, and the last 3 years. And we could see the last 50 years, gold and Dow Jones performed exceptionally well as an inflation hedge, assets exceeding 5,000%. But the last 20 years, we could see that gold has outperformed the US market. And between 700% and 400%, that is an outperform of exceeding 70%. For today's content, there are three segments. First, I'm going to discuss a recap of gold is still inflation hedge assets using the example of the last 20 years. Then we're going to move into in-depth about gold. It is still a currency hedge assets. And lastly, I'm going to share with you how to invest and trade in gold in a time of continuous inflation. But before that, let's take some time to read into the disclaimer down here. Let's get into our first segment, gold. Today, it is still an inflation hedge assets, but we're going to do a comparison over the last 20 years. And we have to understand this, that in a ever increasing money supply all over the world, inflation will be there. And in fact, all the central banks, especially the Fed, has targeted to have 2% inflation every year. Why? Because they knew that with the increase of money supply, inflation will be there. And we could see in this demonstration a comparison between the Dow Jones, the US equity, and the gold, that over the last 20 plus years, it is on the climb. Dow Jones is appreciated by 417%, so is gold appreciated by 770%. But if I really going to put its performance, who is better, I would say that between the two, gold has outperformed over 70% compared to the Dow Jones. Now let us move to our key discussion here today, which is gold. It is also a currency hedge assets. And I'm going to do a comparison between dollar yen and COMEX gold here over the last 20 plus years. Now, first thing we have to understand here is that between US dollars and the gold, there is an inverse relationship. And first, we could see that somewhere around here, the gold has moved up to somewhere around this period, about 2011. Now, as gold move up, dollar weakened against the yen to about nearing during the same period, about 2010 or after, it doesn't really matter. But what I'm trying to show you here is that there's this inverse relationship. And let's look at the percentage gain and loss between the gold and the US dollars. Now, for this case, the gold have increased by 652%. I'm just going to place it here. And the dollar against the yen have depreciated by 49%. The inverse relationship, as US dollars weaken, gold strengthen. Now, during this period, somewhere around 2011 or 12 to during this period about around 2016, gold has depreciated. And also during this period, we see that from around 2012 to about 2016, the dollar have appreciated against the yen. And let's look at the numbers. For this case, gold have down 46%. And for the dollar against the yen, it has appreciated by 66%. So once again, let's look at the dollar. It's more obvious here between dollar and yen. So around the period 2016 to the pre-pandemic, the dollar kind of weakened against the yen. And I will assume that the gold have strengthened somewhat. Let's look at before the pandemic is from here to here. That's against once again the inverse relationship. And the gold have appreciated by 100%. That's 100. And whereas the US dollars against the yen have depreciated by 20%. And of course, during the pandemic, US dollars have appreciated against the yen. And we could see that gold generally have in a range bound and still stay firm. But let's be very technical about this. Say from the recent high to the recent all-time low, the US dollars against the yen, this was at up 50%. And whereas the gold, it is down 21%. And there's something that I want you to take note of. Very interestingly, I'm just going to ask you this question. What happened when the gold appreciate, and how much in percentage did the US dollars depreciated? And in the same time, in the reverse, when gold depreciated, how much did the US dollars appreciated? Now let's look at here is that whenever the US dollars depreciated by 50%, gold has have an inverse relationship of almost 10 times gain. Whenever the US dollars appreciated 66%, gold just depreciated by 46%. So similarly, when the US dollars depreciated by 20%, gold have appreciated in this case 5 times more. Recent rally between the dollar and the yen, US dollars have appreciated by 50%, whereas gold just depreciated by 21%. And in this example, it clearly showcased that over this period, that gold, it is also a currency hedge asset. And I want to challenge you at this point in time, moving forward, what will be the strength of US dollars? So, and it's very clear to me that I would say that likely the US dollar is going to continue to face a lot of headwind. And for that reason, that's another proposition that gold may continue to appreciate. Now, let's turn over to our last segment here, that how I invest and trade in gold in a time of inflation. And we discussed that inflation, or maybe we know that inflation is still going to stay here. And how I invest in gold is that since as early as 2008, I have 2 portfolios. The first portfolio is for investment, and I have all sorts of gold related, about 10% of my net worth. And out of this 10%, I have some physical gold and quite a bit of paper gold in ETF, in unit trust, and in some gold mining companies that pays dividends. And for trading, I will look at the derivative and the futures trading. This is COMEX Gold Daily Chart, and we have discovered about how to draw a classic uptrend line in the past video tutorial. And with it, and just about 2 weeks ago, we saw that the candlestick or the price broke convincingly below this uptrend line, immediate uptrend line. And at the point, we hold a view that maybe for the COMEX Gold is there's some short-term sell short opportunity. And here it is right now. It's moving down. And my first target for the gold will be somewhere around here, 1,750, or about nearing to about 1,008. And that's about 150 points movement. And for the, if you're into trading, and definitely I advocate about trading into derivatives, because we have to understand that every instrument are made for a specific purpose. For assets like stocks is for investor. For derivative like futures, it is for traders. And we're looking at is the CME Micro Gold Futures. It states that every micro movement, the 0.1 point is worth $1. So naturally is at 1 point is 10, at 10 points 100, and 100 points movement, that's $1,000 worth P&L. And for this context where we have take a short-term view on the sell short opportunity around here, I'm expecting about 150 to about 200 points movement down. And 100 points is 1,000, means that 200 points is 2,000 US dollars that I'm expecting. But definitely, where we discussed that gold is still generally on an uptrend, and definitely be looking out for buying opportunity when it hits somewhere around the secondary uptrend line. So I've included some of the past video tutorials relating to today's discussion, and its links below. So keep watching it again and again. You too can get into the market with greater precision. I always enjoy studying the correlation between the markets, and I hope that today's sharing it will be helpful in how we invest and trade. Really happy that you stayed through this video. You have many great trading weeks ahead.